Hi, everyone. I'm Rosemary Miller here with Janet Novack, a money and markets reporter for Forbes, here to tell us everything you need to know and do as student loan repayments are set to resume. Thank you so much for joining me today, Janet.
My pleasure.
So, Janet, what should borrowers start doing starting today?
Well, starting today, they have to start paying attention to their student loans. And they may not have done that for 3.5 years because there was a moratorium and because every time you turned around, there was a change in what was going to happen. And they kept extending that moratorium at the last minute. Now the moratorium officially ends at the end of August and payments will resume in October. But before they resume, you have to make sure that the information they have about you is correct and that you're in the right plan to save you the most money. So the simple thing is that 30 million of the nation's 44 million debtors, student debtors, may have a different servicer than they did before the moratorium started. So you need to go to studentaid.gov, the government site, not a private site, and make sure that A, your current address is correct. B, check who your servicer is. Then go to that servicer if it's a new one and set up an account and make sure they have your address. And most importantly, the payoff here is that you may find that you want to switch the plan that you are in for repaying your debt to save money. So that is it's bureaucratic and sometimes the site is glitchy, but there is a payoff here that it may save you money. That's
So, what
crucial.
kind of payment plans do they have to choose from? I know there's a new one, Save, right?
Yes, yes. So there's traditional payment is 10 years of level payments and it's all gone. And if you make lots of money and you want to get it out of your life, that's the way to go. But if your debt is very high compared to your income, then you want to look at what are called income dependent repayment plans, IDR, and the new one, Save, is just huge change. Now, most people will do better in Save than any of the other half dozen older in, income contingent repayment plans. And there are a couple key things with Save to know about it. Number one, it exempts a larger amount of your income from any repayments, right? So the old program it's replacing, which was called Repay, exempted 150% of the poverty line, all right? So and now it's going to exempt 225% of the poverty line.
So, what does
So
that
for
mean exactly?
Okay. So for a single individual, we're going from like an exemption of you don't have to pay anything on the first 27,000 to you don't have to pay anything on the first 37,000 of income. That and assuming you're paying 10% of your income above that level to the government, that alone is going to save you $1,000. That's number one. That's a biggie. Number two is that under SAVE, if all you have is undergraduate debt, you will only have to pay 5% of your income above that 225%. And if you have nothing but graduate debt, it's still 10% of your income. If you have a mix of undergraduate and graduate debt, then they do a melded rate. So it might be 7% or 7.5% if your debt was half and half. So that's another huge savings. A third area, which sounds obscure, but in 10 years you're going to care about it, is if your income based payments are not enough to cover the interest you owe each month, they used to take that excess interest that you weren't paying and add it to your debt, capitalize it. They're not going to do that under SAVE. So you're not going to turn around in 10 years and say, oh my God, I've been paying 10 years and I owe more than I did when I started. Now, again, if you can easily pay off your loans in 10 years, then you may just want to do that. Whereas if you take an income dependent repayment program, it's probably going to be 20 years of payment if you have only undergraduate debt, 25 years if you have graduate debt. And by 25 years from now, if you went to graduate school, well, you're probably paying for your kids' college. So that's kind of depressing to think about. But the
Right.
point is that at the end of the 20 or 25 years, they're going to forgive the amount you haven't paid. There's another reason, a very compelling reason, to do income dependent repayment. If you are hoping for what they call public service loan forgiveness, that means if you work for the government or a not for profit. And I don't mean if you work for an unprofitable company. I mean if you work for a charity or a not for profit. Then you only, I know, because lots of us may work for unprofitable companies. But and you have to work full time. And after these 10 years of payments, they're going to forgive what you haven't paid. So that is, spectacular. Again, if you're earning lots of money, if you're an investment banker, then pay it off in 10 years. You don't want to deal with Uncle Sam for 20 years, or you might even find you could refinance at a lower rate with a private lender. But that is doesn't describe everybody. There are a lot of people who are going to have trouble making that payment, particularly they may have rented a place or taken out a mortgage or gone on with their life not counting on those payments that had been suspended for 3.5 years.
Right.
So there's actually a calculator on the student government site, the one run by the legitimate one. Do not just Google for a site. Go to studenta.gov and you can see how the different repayment plans would affect you. The other thing that you may want to do is check into what's available to you at work. And this is really important, particularly if your employer is a larger one. There is a relatively new benefit where your employer can pay for up to $5,250 of your student loan repayment a year, and it's not taxable income to you. Now, your employer has to offer this, but lots of employers have been paying this same benefit to help you go to school, tuition reimbursement. So during COVID, Congress extended that till at least 2025 to student loan repayments. And it's something that, yes, it's temporary, but we know from history that if a benefit becomes really popular, then they extend it. If I were a millennial or a Gen Zer with very desirable job skills and I had my choice of employers, I would want to know that this is a benefit that they're offering. So, in fact, right before the student loan moratorium began, there was a survey of new graduates and what did they want most? They wanted health insurance and they wanted vacations. And third was they wanted help repaying their student loans. That was
Right.
more important to them than a good 401k because frankly, they wanted to get that debt paid down with some help. Then they figured they'd start saving for retirement. So, there are things we can do at the government site, and there are things we can do by perhaps nagging the HR people a little and see if they'll provide this benefit, which I think is going to be very important to attracting and keeping millennial and Gen Z workers.
Right, that would be really helpful. Do we offer
Yeah,
it? No, I'm kidding. But Janet,
I'll talk to
so
you about that later.
the Biden administration, they proposed a few new policies recently. They are getting some pushback from it, but could you go into that? Could you tell us about it?
Okay. So a lot of, all the focus was on the loan forgiveness program that was going to forgive 10 or 20,000 that the Supreme Court, to no one's surprise, shut down. Okay?
Right.
But meanwhile, I'm going to give them credit. They have piece by piece been putting forth smaller policies that make a huge difference. Now, one of them is this SAVE program, I said. That makes a huge difference going forward. But some of the other things they did are designed to help people who got caught in the student loan repayment purgatory. And one of the important things that they did was they said, look, you've been paying for 20 or 25 years. And if your loan servicer had told you about the income dependent IDR repayment, it would be time for us to forgive your loans, right? So they're
Mm-hmm.
going back and looking at um, old accounts and seeing people who really would have benefited from that and were not given proper guidance by their servicers. And they are sending 800,000 people emails saying we're forgiving something on the line of 40 billion in debt because these people either they'll be close to repayment or they'll be paid up. These are people who've been, Gen X or whatever, 20, 25 years they've been paying.
Mm-hmm.
There was a last minute lawsuit challenging this, but the judge said, nope, it's going forward. Now there's another one that's been blocked by the courts for now. This other one is primarily for people who went to for-profit schools and they were misled about what they might earn when they got out. It's called, and so there was a lawsuit, and some people involved in that lawsuit got their loans forgiven because they'd been misled. So then the Biden administration said, okay, now we're going to apply the same standards that we've settled on and give those without a lawsuit to other people who had been misled by the private schools. That one has been blocked by the courts for now. So that's that one. If people, went to a school and they thought they were going to make a lot of money, and now they can't repay, they may yet get relief,
Mm-hmm.
but right now it's on hold. So those again. So think of it this way: save are for young people getting out who are trying to figure out how can I possibly make my payments, and these specialized programs where they're forgiving debt are for people who've been paying for 20 or 25 years and really should not still have debt if things have been handled properly.
Mm-hmm.
So there's
Well,
there's and I have to say it is very complicated. And we're actually really lucky at Forbes. We have this gentleman, Adam Minsky, who is a contributor to Forbes, who's a lawyer who does nothing but student loans. And I like to say that Adam reads all the lawsuits and all the regulations, so I won't have to. And if there's an update, if there's something new, if there's a new regulation, anything, if you just follow Adam Minsky, you will find out about it right on time. But again, it's been 3.5 years. Who wanted to spend all your time reading Adam? Sorry, Adam. But now is the time to plug back in and start paying attention. And yes, this stuff is totally complicated. It's probably worse than doing your taxes. But if you pay a little bit of attention, you could save yourself a lot of grief just by updating your mailing address and some money. I mean, we're talking about at least 1,000 a year, the difference between save and the repay program. And
mm-hmm.
I know there are some glitches at the government site. It's better than it has been in the past, but with this massive restart, it's going to be glitchy. But you can't just sit there and say, I'm going to wait till they work it all out, because the repayments are coming, and the last thing you want is to not know that you have to repay. Now, as a practical matter, if you miss deadlines, if you're a chronic procrastinator, the Biden administration has said that missed payments for the first year, they're not going to send you to debt collectors, they're not going to penalize you. But still, you'll have missed a payment. And if you're working for forgiveness after 10 years or 20 years, that month won't count. And you'll have a lot of grief. So you want to get on top of it, get back on the repayment bandwagon. It will probably be a lot less painful
Mm-hmm.
than you might have thought it would be. We did an interesting story where we talked to Gen Zers who had never paid because they graduated or left school in 2021, 22, or 23. And their ideas of how much they would have to pay a month were really And it's totally understandable. I'm not criticizing them, but they thought they were going to have to pay a lot more, like half their income. And yeah, if you want to pay on the standard plan, that might be the case. But if you
Right.
sign up for an IDR plan, you're not going to be paying half your income. You're going to be paying
Well,
10% above 225% of the poverty line. So
well,
that's
that's
good
good to
news.
know. Do not want to be paying half my income. Anyway,
No,
thank you so much for joining me today, Janet.
you're quite welcome.